All right, ladies and gentlemen, welcome back. Once you're back here into the room, please take your seat because our panel discussion will be starting very, very soon. Thank you. All right, ladies and gentlemen, welcome back. And right now we'll be having our panel discussion. Earlier on, during the earlier part of the day, I have mentioned to you that today's panel discussion, the topic today is things you need to know about real estate crowdfunding. And to help us to lead today's panel discussion, we have Miss Becky Ellis. Miss Becky Ellis, can you please wave and say hi to the audience? Miss Becky Ellis. She has more than 13 years of experience working with global publishing leaders including UBM, Time Inc., WebMD, Reader's Digest, and Gruner Jar. And next on the panel, we also have the CEO and Director of Australian Small Scale Offerings Board, Mr. Paul Niederer. Mr. Paul Niederer, please wave and say hi to the audience. Who is one of the world's leading authorities in equity-based crowdfunding investment and will lend his regional perspective to this session. And also we have with us the partner of Harry Elias Partnership, Mr. Francis Goh, Dr. Dolph, earlier you have met him, and also the CEO of Co-Assets, Mr. Gettigo. So I'll hand over the panel discussion to Miss Becky, and here we go.
Since we're in Singapore talking about crowdfunding, I'd love to get a perspective on how crowdfunding in Asia is different than crowdfunding elsewhere, either in America, in the West, and how in Asia it's different from country to country.
Well, crowdfunding is interesting because it's at different stages around the world. It depends on the legislation in those countries. Like reward crowdfunding, where you just have something where people get instant gratification from, like a video or whatever. That's mostly covered by sort of trade practices, sale of goods and things like that. So that legislation is in most countries. But in terms of the equity and the other areas and the lending, crowdfunding, it's covered by specific legislation in those countries. So it's not something that can be universally applied all around the world. Like, for example, in Australia, there's not all that much in the property crowdfunding because of the different types of legislation that's there. Equity crowdfunding is allowed to a degree, and then reward crowdfunding, like every other country, is taken off. So my view on it is it's very dependent upon the legislation in the countries.
Well, the thing I'd like to point out where I think it's different in Asia from the rest of the world is Asians, traditionally, in the last 20 years anyway, have really come up in terms of being global. Asians travel a lot, they're willing to go to other countries. Here in Singapore, you go to Indonesia on a whim, you go to Malaysia, you go to the Philippines, you don't think anything of it. And I think crowdfunding, for that reason, will take off faster in Asia than it will in some of the older, Western world areas. I see that as a real phenomenon. I mean, ones where the population is largely graying. Europe is like that. Europe has got some very good things going for it. It's got 330 million people, slightly larger than the United States, but it is very much a graying population. So they are slower to adopt new technologies. The uptake of smartphones in Europe is lower than in Asia. Asia's got phenomenal uptake of high-speed internet and smartphones and new technology and wizardry. And crowdfunding lends itself to deploying those technologies more so than more conventional forms of investing. So I think Asia is well poised to do really well out of crowdfunding.
Well, I think I'll take a more micro perspective. If you look at the Singaporean investor, the typical profile is that we've got a very strong Sing dollar. You've also got local curbs, especially in the property market, as the government tries to cool the red-hot property market and bring it to a soft landing. So you've got all this pent-up demand. You've got people, man in the street that's attending Rich Dad, Poor Dad talks, which are being advertised in the newspapers. And suddenly they've woken up to this great idea about what a great asset property is, and they want a piece of the action. So where does all that money go? Typically, it will start to flow either overseas. You've seen the phenomenon in Iskandar. And I think that's going to get repeated, in various jurisdictions around the world. Crowdfunding is then going to make an edge into this because people now realize that they can pool their resources. If you are able to provide them with a platform where they feel sufficiently secured, that they feel that their 100,000 can go further, put them in touch with an asset class that is previously out of their reach, or which was something which they never considered before, I think you would have a rather interested audience, and a lot of people who are just raring to go and say, where do I put my money, or where do I sign, if you are able to get in front of them. That creates great opportunity, but it also creates with it great risk. And I suppose we'll field more questions on that later.
Well, I think, can you hear me? Okay. I think from our standpoint, it's, well, we don't really look at regions, but I think the whole process of raising funds, collecting funds, creating awareness, if you look at it, it's a supply chain, it's a whole continuum. So I think what to us is interesting is where is the common denominator? So hello, okay. So where we think is interesting is where is the common denominator? And I think, and if we can find where that common denominator is, then I think that's where the scalability kicks in. Because we got to recognize where is, what part of it, or what part of the fundraising process can be internationalized and what can't. And I think if anyone who's able to crack that egg, who's able to solve that part of the puzzle, then I say that the company, the individual, they'll be poised for very, very good growth and very, very quick adoption. So I think that's my take on more of the macro as opposed to just regional.
Are there any countries in which legislation makes crowdfunding for real estate particularly easy or particularly difficult?
Okay, I think given time and focus, I'll just look at the Singapore situation. And I'll make the comment this way. Specific crowdfunding legislation doesn't exist yet. So in that sense, it makes the space a free-for-all. Okay? On the other hand, it also makes your life more difficult because one of the participants I spoke to earlier said, we actually tried to write to the authorities and ask, can we do this? And it said the answer that came back from the authority confused them even more. Okay, now look, you don't expect the authority to commit to anything at this stage. I think the authorities are going to adopt a wait-and-see approach, more so because they do not want to be seen as stifling entrepreneurship. All right, but having said that, I think you need to look at the legislation from a perspective of your structures, whether or not they are robust enough to be scrutinized, and whether there are governance issues that need to be addressed internally. And then you need to look at your interface with the consumer, because at the end of the day, if there is going to be any problems, it will be a consumer issue, depending on the type of retailers or investors that you are approaching, and depending on the scale of the outcry. That's where you might get enforcement or reaction from the authorities. So I think from the Singapore perspective, I would say tread carefully, get your structures right, and that should enable you to navigate this space safely.
To piggyback a little bit on that,
Netherlands is the best.
the Netherlands is the best. Is that what I heard?
Yeah.
Well, there you have it. We can go home now.
Everyone shift your operations over to there.
And question.
Yeah, hi. Can you talk a bit more about the structures that you mentioned? Like, I got the concept, but if you could maybe, like, how that actually applies in reality.
Okay, I need to be careful not to be giving legal advice off the stage here. Okay, but essentially, most of you would be starting off with a company, and you'd be wanting to look into the various opportunities that come here in Singapore. The question is, how do you position yourself? Are you going to come in as individuals, as a company, or are you going to set up some other kind of structure to actually exploit the opportunity here? And then if you're looking at the way you interface with your, well, shall we say, the end user or the consumers or the persons who are actually going to buy your product, how are you going to structure your arrangement with them? What are you actually giving them by way of returns? Are those returns sustainable? And in what ways are those returns guaranteed? Alright, because in the event anything goes wrong, these are the typical, shall we say, pressure points in any dispute. A disgruntled consumer may say, you promised me 21% returns in 2 years and I didn't get it. Alright, or I paid monies and I never got a certain title deed or a certain contract that I expected. You know, and those are the typical kind of problems that you would need to anticipate and ensure that you are in a position to deal with them, given your internal structures. Otherwise, the next thing you'll be doing is either facing an arbitration or a court case. Alright?
Since you spoke to both returns and title deeds and whatnot, could you or someone else on the panel please speak to the different types of investments, the returns versus equity investments, and are there other types?
Well, I can't say, okay, what I can just share is from what we have seen so far. And I must caveat it by saying that, you know, it's not the be all and end all. I think to answer the question, if I got you correctly, you're asking typically what are the kind of returns that people can expect from crowdfunding deals, as well as what is the typical structure, am I right? Is it debt or equity? Well, let's just say on the site, or we come across a lot of people coming to us for both debt and equity arrangement. So, which means to say that from the opportunity provider end, from the developer end, you know, there are definitely a lot of offering. Now, what I want to value add is to just share with you what we have seen to have done well in the last 1 year, 1 to 1.5 years, 2 years. And typically, the Singaporean investor, once again, I can't speak for the Malaysian investor. The mic doesn't like me. Okay. Sorry, I lost my train of thoughts there. Okay, so what the Singaporean investor typically likes is something with a definite entry date and a definite exit date. So if you drag too long, such as equity, some people might not be as comfortable. Okay, of course, the shorter it is, the better. In fact, typically, I think we've done a lot of research and profiling. The Singaporean investor they have a lot of cash on hand, but they are very risk averse. And I think anything that can give, say, then of course this is in a backdrop of a very low lending rate of, you know, the interest that you're getting from the bank account is about 1, you know, it can be FD or what, you know, not more than 2%. So typically anything above 2, you get their interest, but it doesn't mean that you get their commitment. So anything, we're seeing deals where, you know, mezzanine financing, off-the-book financing, we are seeing developers, listed and non-listed, actually coming to us because it is an alternative. Of course, at the end of the day, would they use us? Maybe, maybe not, but we are starting to see a lot of interest. But I think at this point, I also must say that there is space big enough for different markets. What do I mean by that? I always say this in my presentation. Big guys like Far East organization, big guys like CDL, they would never ever come to us. Okay, so in fact, that is one of the key things that we look out for. You know, if you're coming to us, raising 20 million, okay, giving 50%, then I say, okay, why are you raising 20 million? If such a good deal, the PEs will be the first one knocking on our doors. The VCs will be the first one knocking on our doors. So I would say that for us is probably something that warrants a bit more digging into. So I think, I hope I've kind of give a sense. Well, I'm not sure whether I really answered the question, but I hope that will give us a broader sense of just simply, which works better. In fact, both can work depending on the returns, but for the Singapore investor, shorter term, 1 year, 2 years, higher returns between 10 to 15%, we're kind of in a sweet spot there. Then, of course, then beyond that, if you've gotten attention, they'll look, okay, where is it? Is it in a safe place? How the developer track record, is it credible? And if you don't get those first two right, you probably wouldn't go even to the second stage. I hope that answers it.
Paul, did you want to speak to this as well?
I was just going to make another comment. One of the things that, as human beings, it's often difficult to accept is that, you do have some personal responsibility. At the end of the day, it's your money and you're putting it into something. And especially as we get further into crowdfunding. And so I had something come through to me the other day and I thought, well, isn't that good in terms of doing due diligence? And it was a property in America where this guy said he wanted to do a renovation on it. He wanted some money to fund it. But to support it, he had a list of the 20 properties he'd done that with before, plus photographs before and after, and also the profit and loss accounts and the money he'd made out of each of those 20 properties. So when somebody came onto the site and you've got your $20,000 or whatever and you want to put it in there to do well, compare that with somebody that this is the first property they've ever done and they want you to help them, or this chap that's done 20 of them and made a good profit. And then you as an individual can look at those credentials and look at the legitimacy of it, maybe do a bit of due diligence yourself and then decide to invest. And I think that in this area of crowdfunding, we can't really rely on government and regulators to look after this sort of stuff. We've got to rely on yourself doing some work and looking at it and say, does this stack up? And in the case of a guy that's done 20 of these already and he's showing you that he's profitable and the next one he estimates this is what he's going to earn, then you can make your own decision.
Paul, you make a very good point, and the perfect analogy that most people can relate to is eBay. For those of you who've done anything on eBay, be it selling or buying, one of the criteria you no doubt have before you decide to hit that button and say, yes, I'll put in the bid, is this seller good for his word? Are his descriptions accurate? Does he actually post? Does he package well? And you can see all of that on the rating. So if you're buying especially a higher priced item, you would feel far more comfortable if you could see that that eBay seller has got a high rating and he's done 358 transactions and he's gotten 5 stars all the time. As soon as someone gets even a smallish number of 1 stars or bad ratings, negative reviews, you tend to shy away. And crowdfunding will be the same. This is one of the exciting things about it, is it will enable all of us to participate in rating it. It's a bit like Angie's List, if you have them there, or lists on the internet where you can see what tradesmen are like, plumbers, electricians, or nannies to look after your kids and all that sort of thing. Anyone can write a good review on themselves. I'm dedicated, hardworking, I always go the extra mile. And usually they haven't even created those documents. They just cut and paste them from someone else's that they thought, well, that looks pretty good. But on eBay, you cannot fake it. And the same will happen in crowdfunding. And that's one of the greatest things about it. It will be a communal forum where we can all rate things. And it's exactly what you were saying, Paul, when you see good results, because this person's done 20 projects before, that speaks volumes beyond what a government can regulate. I'm all for government regulation and maintaining law and order and all that sort of thing, but there's a limit to how much they can do with the true interest of the investor at heart. Because one could argue that at some level, the purpose of any legislation introduced by any politician is partially to help them get re-elected the next year. And that's why one can also argue that anyone can get elected so long as the number of people to whom they make promises is larger than the number of people that they must tax in order to fulfill those promises. You see, so with crowdfunding and with eBay and similar, so you don't have that anomaly. It is pure, everything's done on its merit. One of my favorite sayings in the world is, charms strike the sight, but merit wins the soul. And crowdfunding will allow merit to come to the fore rather than charm. It's really good.
I like the comment that you made, that really, it really comes down to the personal responsibility of the investor on the one hand, and of the opportunity provider on the other. And no amount of legality, no amount of legislation, no amount of contract as well might even eliminate any kind of risk. Let me give you an example of a recent inquiry that I had. Someone wanted us to structure a fund, structure some deal to develop a hotel in Iran, and there were some promises and well, shall we say, warranties that were being made and has promised a certain rate of return over a period of time. And the person was basically telling us, please give me a contract that ensures that nothing will go wrong. I told the person, I said, I can give you a contract that makes clear what you have agreed upon, but whether or not anything goes wrong depends on how well you know this person who's offering you the opportunity, whether or not you've actually done a site visit, and whether you've even asked yourself the practical question of whether or not you can transact with Iran. Okay? And the guy looks at me and says, no, I haven't done all that. I said, please start from there before I even put pen to paper to draft the contract. So I think I hope that drives home the point of what has been said about personal responsibility and about the personal engagement to actually rate the experience. Because I think at the end of the day, it's really a commonsensical approach as to how good that opportunity is and what rate of return you're going to be expecting from there, and whether or not then that's going to be realistic.
Oh, question in the back?
Okay. My reading seems to be that we are analyzing and paralyzing ourselves in the process. But what is it in it, the Jumpstart Our Business Startups Act, the Jobs Act that is in the States, has the very fact that the American government has given the go-ahead for it, are the missing elements otherwise? I mean, shouldn't we start off here, use this as a basis and highlight the essence of what already is here?
Well, the trouble with the US system is that they're solving it with a legislative answer, meaning that instead of looking at common practice and what's going on and looking at the participants in the market, they're writing legal law and then asking the SEC to implement it and manage it, and then FINRA, which is the regulator, to manage it. And so by the time, that's why it's taken nearly 3 years and they still haven't got agreement, and one of the senators has put in another bill. If you look at England with the FCA, what they did is they looked at the participants in the market and they, okay, you can have a go, you try and we'll monitor it and see how you're going and sort of accept it. I think probably the Singapore authorities will do the same. They'll look what's happening, they'll talk to participants, and they'll eventually look at existing legislation and see what needs to change. Perhaps you could carry on.
I tend to agree with the US approach because typically the US answer would be to legislate on every aspect and then look at implementation. Now I know I've generalized it somewhat, but that seems to be the general overall approach. That's why the authorities here in Singapore do adopt the more, shall we say, passive or reactive approach, which is not necessarily wrong, because they understand that there has to be a certain space for entrepreneurship, and entrepreneurship necessarily must push boundaries. But I think where the authorities will be drawing the line in terms of crowdfunding legislation would be to look at things like transparency, governance, and a certain element of accountability. I would imagine that the accountability would probably relate to the type of investors that you would have to can approach, the types of disclosures that you would have to give, and possibly any security deposits or stakeholding funds that you may have to put up if you are going to develop or present an opportunity or project of a certain scale. All right, now these are probably the kinds of things that I would expect the legislation to have eventually. But the point here is, in the meantime, there is nothing that stops you in terms of crowdfunding if you are committed towards fair play. In fact, I think if the participants in this room and in the general market are able to keep their act clean, this general concept of basically having fair play, fair disclosure, and good outcomes, I think at the end of the day, the industry would self-regulate. Because really, what are you looking at? You are not setting up an illegal company structure. You are not trying to cheat people of their funds. You're just trying to match opportunities, and you are trying to deliver results. If you guys are able to actually get that together and actually produce that, I think the industry and the crowdfunding space in Singapore would be, a very happy space.
I think that's very well said. I'd just add to that in a very simplified term, and not one that would stand much rigorous legal scrutiny, it's probably fair to say that in the United States, what's happened there with the Jobs Act is they've removed legislation that prevented crowdfunding, as opposed to the Singaporean situation where, according to what you're saying, there's essentially no legislation yet. They're just hoping that people conform and that it will self-regulate. But it is a fundamental difference, one where you have a country that is very much regulated and they introduce new regulations to remove previously instigated regulations that effectively prevent crowdfunding, compared with a country where, as it stands at the moment, there are no rules and regulations restricting it. And there is the hope that everyone will have good intent. And the only reason that we really need regulations about anything is because there are always invariably people who try and flout the laws or cheat the system or get some benefit at the expense of someone else. So government walks a very tricky line between over-regulating and stifling entrepreneurship and under-regulating and allowing the unscrupulous to flourish. And that's a line that each country determines on its own, and usually with varying degrees of success. I applaud what Singapore is doing. So it's I think a very lucid approach to it. And it's also a sign of faith in its people.
I think I'd like to just maybe add to that. My take on the Singapore's government position, although I'm coming from an end user perspective, is that I think they are really looking into it, but at the same time they are encouraging it. A simple case in point is that some of you here might know, or some of you here might not know, is that actually co-assets, we've actually gotten government fundings through iGEMS, Media Development Authority. So through the iGEMS program, the government, through the Media Development Authority, has invested in the company because they do see this as the next growth area. Of course, and I think from that perspective, and even this event is supported by the Singapore Tourism Board, which means to say that they are aware that on the ground there are things happening, and it's just a matter. And I would say that right now, we've been around for a year, and we're still around, and we think we'll be around for much longer. But I think it says that because it says that there is some scope for some flexibility, and this is why we are doing this here today. Yeah. I think it is not as draconian or as highly legislated as some people might go away thinking. Yeah, so it's really about self-censure. At least do it in the right spirit. Okay, fair play. I think these are this has to be the underlying tenets of our group.
This idea of self-regulating industry makes me nervous, but I'm the only American on the panel, so there you have it. Can somebody talk about the different kinds of real estate and how they're using it? Are there any different types that are at the forefront of this? Residential, commercial, industrial, and are there any differences in using crowdfunding in different types of real estate?
Well, I think I shared earlier during my presentation, typically a lot of people understand property investing, and typically property investing happens in the sphere of residential. When residential gets a bit too pricey, people start looking at commercial. Now I know why they brought this. And then they're looking at commercial and industrial. And I think so far, the one thing that we haven't seen that prominently is really infrastructure. So I think which means to say that a lot of people are investing through crowdfunding in residential and a bit of hotel, commercial-ish. I think we have yet to see infrastructure, but we are starting to see interest in that area. But to be fair, a typical infrastructure project is, the ticket size is huge. If you're talking about building a dam, it's going to be very, very pricey. But in time to come, things like wind turbine, windmill, things like the impact investing, all these new clean technology that now can be done at a smaller scale because of technology. Now that is really where the potential is. And of course, I always like to say that think about 5 years ago, 10 years ago, Facebook. Had you invested in Facebook, you'd be a very, very wealthy guy today because they were at the cutting edge. If you invest in any forms of cutting edge technology, you'll be reaping the rewards today. Similarly, if you are doing that in the sphere of crowdfunding, crowdsourcing, 3D printing, all these kind of exciting new stuff, because that is really where the upside is. So that is specific to real estate crowdfunding. Of course, the whole crowdfunding sphere is much bigger, but let's not go there.
I understand the role of co-assets in this. But I'm a bit confused here. Are you asking us to go and collect funds?
Are you asking us to go and identify, raise funds and do your own project? Or are you telling raise funds and come and invest with co-asset? Because I think this is quite similar. It looks like, crowdfunding was done on a smaller scale, to do a movie, to do something on an individual basis where they never expected returns. Right now, we are going in a bigger scale. People want returns. And in India, they have got this chit funds. It is quite similar to this chit fund. And because the regulatory bodies are not there, anybody can do. You can even be a fraud, raising funds, and overnight you run away. That is where the statutory requirements are important, so that to ensure that it doesn't go out of control. People with bad intentions are always there. You just do not know. So the role of co-asset, whether you are raising the money, we raise the money and come to you, you identify the project, or we are going to do it ourselves. Thank you.
Okay, I'll give it a shot first. Okay, the role of co-assets is simply this. During my presentation, I say we don't take funds, and I mean it. We are not fund managers, we don't have a license, and we don't raise funds. It means no single cent comes through us. Now, what we do, we are targeted lead generation site for the purpose of crowdfunding real estate. And why crowdfunding real estate is because unlike other forms of crowdfunding, how do you validate whether the person is going to give you something? What do I mean? For example, if I'm going to crowdfund someone's project, or rather, if I'm going to let the crowdfunder put his project on the site, only 3 categories of people can actually put his opportunities on the site. First category is that you must be a registered developer. It means to say that you have to be either registered here or registered in your home country. So which means at least there's some fiduciary safeguards already built in the fact that you are a licensed developer either in Singapore or in your home country. Now the next capacity you can come in is that you must be a registered realtor or registered property agent, so that you won't get into the whole issue of the selling of properties and so on and so forth. Okay, so if you're a registered realtor, you can list because it's okay, then we won't go into the earlier issue that Francis actually brought up. If you are a agent here or in your home country, it's okay. then you might be saying, what if I'm a landowner? You know, I am this aspiring developer. I own my piece of land. I know that by converting it into an eco resort, it's doing good for people. Okay, then the requirements would be for you to own that piece of land, because ultimately it has to be, there has to be some form of paper trail, there has to be some form of asset. This is the kind of accountability that we're talking about. Now, this is just the basic threshold. Of course, in time to come, and I mean, for those of you who have actually tried, if you just want to list, if we just let you list, provided you fall within these 3 categories. Now, but if we were to do things like, even for us to push, or even for us to invite you for this kind of, the booths, we do a lot of additional steps, and some of them includes checking your ACRA. We check, for example, how much paid up capital, you actually give. And some of these guys, their paid up capital, they are a Singapore registered company, their paid up capital is $2 million Sing. So is that a guarantee that nothing bad will happen? Of course not. But I think at the very least, we ensure that, those people who actually want to list, and even for landowners, we make sure there is a title, or at least, if they're in the process of buying a land, the lawyer signs off and says, okay, at least write a letter of guarantee, say, okay, there is this client, and he is proceeding. And what we do is we actually do call and say, okay, we do spot checks and call and say, okay, yes, you give me a number. Can I just check, Mr. Lawyer, do you have this client? Are you even a lawyer? Is this even a law firm, or is this just some Chinese restaurant? So these are kind of things that we do to at least put some. So, which means to say that we facilitate crowdfunding. We are not a crowd funder. We are not looking for funds. But it is of our interest, okay, to help both sides of the ecosystem flourish and grow. So this is really where we sit. I hope I've kind of answered your questions to exactly what we do.
If I may attempt to distill that very briefly, you're a bit of a matchmaker. Is that correct?
Precisely.
Okay.
Yeah. So that's why I use during my presentation, I draw 2 analogies. Think of us like eBay. Think of us, but we are eBay for developers, looking for funders. In time to come, think of us like a PayPal. Because to grow this, we understand that we need to make things convenient, take the hassle out of it. So that's why think of us as eBay, PayPal kind of setup for the crowdfunding space. Because at the end of the day, we want to contribute and add even greater value than just one basic model. So that is a good analogy. eBay and PayPal.
Other question?
A question regarding the exit strategy, Yeah, I have a question regarding the exit strategy for crowdfunding project. For example, like 1 year, 2 year, how does it work? Thanks.
Okay. Again, sometimes there is no quick fix or one size fits all answer. I know what you're getting at. All right. Let me give you some, shall we say, working pointers. Many times, your deal will focus on what we are doing and what we are going to give you. You then tell the person to believe in you and commit funds, and you start your journey. What many people fail to do is to say, in the event that the deal doesn't work out, and it's not just about you not being able to deliver. There may be genuine reasons why your investor needs to exit, maybe because of a personal crisis. They need to liquidate. What are the terms that you're going to allow them to do? And assuming that you enter into certain crisis, all right? You say that you're going to give them a certain return, say in 2 years' time. But what happens if your project runs into problems? Do you have a backup plan? And is that specified in your contract? Okay? So when you talk about exit strategy, it's just a short form for contingency plans. And a lot of this, the correct answer is something that you are likely to be able to work out either within your company or with your investor on a willing buyer, willing seller basis. Okay? And then, where the legal comes in, is to say, look, let's put it in to a binding contract, something that is clear and something that's feasible. Right?
So I think everyone in here is, oh, another question. Sir? Yes.
The first question is directed at Dr. Dorff. Just now you gave a very interesting example of how you spend $20 to enhance the asset by drawing a circle for helicopter to park in Jakarta. Can you give us another couple of examples where you can enhance the asset value other than drawing a circle? Because I think not many of us own a skyscraper.
Oh, I thought you were going to say not many of you have access to $20, because I have a much cheaper idea that works equally well. This one costs 69 cents. And it's if you're trying to sell a house and the rooms have light bulbs in them that are, say, 40-watt light bulbs, then the room can look quite dark and dingy and the house therefore doesn't look very big or clean or anything. So if you replace that 40-watt bulb with a 100-watt bulb or even a 150-watt bulb, the rooms will look cleaner, brighter, fresher and larger. And if you're really cheap, the advantage of this idea is that 40-watt bulb that you removed, it still works. You can still use it somewhere else. And that's perhaps a ridiculous example at the low end, but one to go up a bit. If you've got a freestanding home or even an apartment, one of the first things that people will look at is just the general look and feel of it. By spending $2,000 painting it inside and out, it can lift the value by 20 or 30,000, and it sounds too silly to be true. How can you say that? Who would spend 30,000 more if it's painted, but they wouldn't buy it for 30,000 less if it weren't? The world is full of people like that. Usually, who makes a decision as to whether or not to buy a house? It's often the women, right? No, it is. It's just
Into dangerous territory here.
I know, but I want more discussion. This has been not a discussion panel. This has been an agreement panel. I want a discussion panel. So, which is the room that women usually look at to help make the decision as to whether they could live there for the next 5 years?
Kitchen.
The kitchen. So the kitchen is often the least appealing place in the house because often they're marketed by men, and I'm getting into more dangerous territory, but they don't know about kitchens, right? Shame on them. So if you spend $5,000 revamping the kitchen, it can lift the value by $50,000. And these are just silly ideas, any one of which may not seem all that significant, but when you add 101 of them together, suddenly you've transformed it from a place that no one's interested in to one that people are fighting over. And you can do these ideas from low level right up to high level. You can spend a lot or a little. And even if your house is completely immaculate, you couldn't do one more thing to that house, then there is still something you can do. Because if your beautiful house that's freshly painted and it's got 150-watt bulbs and the kitchen's good and all that sort of thing, if it's between horrible old houses, what would happen if you offered to paint the neighbors' houses? Firstly, you would make great friends because they say, you're going to pay, we have to pay, you're going to pay for it? They say yes, but it will help your house sell or get a tenant or do whatever you want to do with it. So what I love about real estate, which again is something not shared by essentially any other investment vehicle, is your ability to make money, and it is limited only by your imagination. And that's why I say often the most expensive piece of real estate and the most valuable piece of real estate is the 6 inches, give or take an inch or two, between your right ear and your left ear, because it's what you create in that space that will determine your net worth eventually. And if you don't believe that, if you think it's just words to get a laugh, then you'll sit there and say, well, let's get on with the panel discussion. But if you really get the meaning of that, you'll suddenly have a door open for you that you perhaps didn't know existed. And that is that you are in control of your finances. We're not controlled by the legislation that surrounds us. We're controlled by our imagination. And the legislation only gets in the way occasionally. Because in general, legislation doesn't bother you. It only bothers you if you're dealing in that never-never area where you shouldn't perhaps be operating anyway. And so that's why I'm excited by it. And this whole idea of crowdfunding is it's opening up a new area to which we can also apply creativity, where as long as we stay within the confines of legislation and don't even go anywhere towards a gray area, the sky's the limit as to what we can do. And now we're working on a global scale instead of on a local scale. Be it across the strait in Iskandar or in other countries in Asia or anywhere around the world. It's exciting. And some of you are excited, but some of you are not sure yet. Right? And I think the more you find out about crowdfunding, the more you realize, holy smoke, this is pivotal, this is big. Remember the Gutenberg press, when the press came out, and for the first time we could mass produce documents and get information disseminated. And it was a seminal point in the history of mankind, because all of a sudden the rules changed. Prior to that, the only way information could get disseminated is if you had people laboriously transcribe text over and over, and it would get changed. Every time it got written, there'd be a few words changed, added, sometimes inadvertently, and sometimes with the intent of the translator. Well, I can put it better, or that's not what he means, or this is what I think it should mean. So with the press, it became standardized. Well, last year, I'm not talking about 50 years ago or a decade ago. Last year, for the first time in the history of mankind, more e-books were sold than all other forms of books combined. In other words, the revolution brought about by the Gutenberg press has been laid to rest. Now it's electronic form. We used to all take books with us on planes, and now it's not recent enough, because even a telephone book, which gets replaced every year, by the time it gets distributed, it's already 3 months old. That's how long it's taken to go from print to print. Now, France had a system, they called it Minitel, back in the early 70s. It involved those old black and white CRT screens where your telephone number and your address was in this big database that was updated instantly. They were the forerunners of an electronic database. And now we all do it. We have it on our phones, we just sync through the clouds to our servers and all that sort of thing. And crowdfunding is just another way of expressing the technological revolution that we're all experiencing. Twitter and Facebook and Instagram and you name it. It's out there, and we can apply it to real estate. The world will never be the same again.
So, Dolph, you're looking for some disagreement and to mix it up. So I'm gonna jump in here and say, of those ebooks, for example, how many of those self-published, unedited things would you want to read?
Oh, that's a good point. But even officially published books by big-name publishers like John Wiley and Time Warner and that, it is been estimated from studies that 80% of books bought are never read. That's a scary thought. Right? So people think they absorb the information through a scientific process known as osmosis. You put it on your shelf and it goes to you. I agree, a lot of the self-published books aren't really worthy of being published, but the barrier is now so low that anyone can do it, even if their verbs aren't conjugated correctly and they don't know the difference between a preposition and a gerund. But it still means that the good books, the ones written by the well-known authors, they can now be disseminated instantly around the world.
So my question is you mentioned imagination, and as long as you stay this side of legal. So the 2008 financial crisis, there were a lot of really imaginative people on both sides of that, both the bankers and the people who imagined that they could own homes that they couldn't own, for example. And 5 years from now, so we have a lot of people maybe who might imagine starting crowdfunding, a crowdfunding adventure, in the same way they might want to publish a book. But for a book, you're out a little bit of time, and maybe if someone buys it and they don't like it, they're out a couple of bucks. But as people, flood this territory the way they flooded things from blogs and e-publishing and Kickstarter, for example. I don't know if anyone saw the Kickstarter potato salad campaign that a guy got thousands of dollars, on sort of a joke. So what happens when people start getting really imaginative and really ambitious and start, soliciting money for these crowdfunding endeavors without really being able to back it up?
It's a great question. I'm pleased you've raised it, because so many people who will get in the crowdfunding space from an investor point of view will rely on the government to have done the acid test for them. And this is where you've got to live by your own wits. You've got to be wide awake. And as we've alluded to before, the great thing about crowdfunding is it will have a self-regulating feedback mechanism, which is a fancy word of saying that on eBay you've got those ratings where you can see how good the seller is and how good the buyer is. Often the seller will say, we will not accept bids from first-time buyers. It raises the question, however do you get a bid to completion if no one does that? But I can understand why they want to do that. So yes, there will be unscrupulous people who will try and cash in on this. That's why at the beginning of my talk this morning, I said the thing that sets Wealth Migrate apart is we are not crowdfunding aficionados who are trying desperately to find something to put into our crowdfunding hopper because we think crowdfunding is the way of the future. No, we are real estate investors to the core. All of us on the executive team and the board of directors, and we've been doing it for probably way too many years. I shouldn't say that. We've been doing it for many years. And we now realize that there's this new mechanism that has the potential of revolutionizing real estate investments and opening up to the masses instead of just those select few who've got 50,000 or 100,000 to put in something. It is really remarkable in the breadth of its significance. And that's why I think as an investor looking at participating in the crowdfunding space, you have to be very careful, do your own due diligence and work with people not who've just embraced crowdfunding, but who've been in real estate for a long time. It's a great point.
Yeah, I'm going to say, in response to contribute, I'm going to add two broad ideas. The first really is this. From the questions that I'm hearing, it seems like everyone's saying, oh, it's just crowdfunding, crowdfunding. But I'd want you all to sit down and take a step back and ask yourself, crowdfunding, this idea of aggregation of funds, this idea of bringing funds to an opportunity, it's being taken to a new level because of technology. Where within the value chain are you going to participate in this revolution as an opportunity provider? Are you coming in as a retail investor or as a fund? Or are you somehow going to develop your own platforms that is going to facilitate crowdfunding to the general masses? That is what every one of you sitting out there in this room needs to digest and take away from this event today. The evidence is all out here. The experts that are sitting on my left and my right are telling you crowdfunding has landed in Singapore. It's already taking off around the world. And where will you be when the plane takes off? Alright? But when you analyze this thing about crowdfunding, again, I repeat myself, it is not just about crowdfunding and what's in it and what's, core assets platform or whatever. It's really, what about you? Where are you positioning yourself within? First big idea. Second big idea really is to leverage off this idea that you said about kickboxer and that guy that raised something about, raised, some money over some potatoes. Potato salads as a joke. Okay? Now, that's an example of how a respectable platform like Kickstarter that has had success stories and genuine success stories with other projects has actually been hijacked such that it's gone into this frivolous sphere. Alright? And how did that happen? I had to analyze it from a legal perspective. It is because the platform allowed a participant on board which may or may not have had proper due diligence done as to whether or not that was a realistic, viable project. The whys and the wherefores were perhaps not queried enough. And it goes onto this platform, and people then jump in only to find out that later somehow it's not real, or not what they thought it was. So, on the one level, it is a situation where the participants, in that case the opportunity provider, to use our jargon here, had not been leveling with the investing crowd. Okay? Treated it as a joke or whatever, for whatever rationale. Okay? It's irrelevant for us. But it's left a certain impression as to, these things can happen. And you guys out there are now going to form the judge, which is exactly the self-regulating thing that the doctor was talking about. Because now you all are going to say, be careful. Maybe Kickstarter, not everything is there is genuine, and we need to be careful about what is being provided there and do better analysis. Right? So now let me just quickly shift focus and then pitch a little bit for my dear friend Getty over there. That's why when he set up core assets, he was so determined to ensure that it is going to be a platform that brings, as you say, matchmaking, but not just matchmaking anybody. It is matchmaking quality opportunity providers with quality or qualified investors. Okay, one thing that I think Getty didn't mention is that this platform also has a membership, right? And it is this membership which is the database that Doctor was mentioning, all right? Which is, in a sense, a qualified audience that is just waiting to see what opportunities may be put up on the platform. And Getty has just given some idea in response to the question there about the kind of due diligence and the effort that they put in before they are even allowed to post anything on the platform. So I hope that gives you all a slightly clearer picture of, you know, where you stand in the space, but also where Co-Asset stands in the space. Right?
Sorry, can I ask my second question? Okay, and my last question.
Actually, I'm afraid that I'm getting the time's up flag there. Is that okay? Okay, we can.
Okay, is Director Getty and maybe Francis can add on. Just now Getty mentioned about the opportunity must be a registered developer or real estate agent. But let's say it's a property owner and investor. I own a two-story shop house, and I want to use crowdfunding to fund A&A. Let's say at a third story to increase the yield and the value of the product. So I'm neither a registered developer or a licensed real estate agent. So my question is it legal to do so?
I thought I spoke about it, but I think so. The short answer is you can list on the capacity as an owner. I think the mic doesn't really like me. So the answer is yes, you can list on the capacity of an owner, and to do that, you need to show at least some documentation proof, like title. But all this can be easily sourced. You know, you just download a few dollars. You know, so as long as you're the owner, it's not a problem. Anyway, just for your information, all these things we do check with CEA, Council of Estate Agent, and they do give not advice, but they do give some feedback. They're consultative, so we actually go and have spoken to them and say, okay, you know, and that the short answer is you can, as an owner, but please show proof of ownership. Okay, one last one, no more.
Can Co-Asset take the lead in drafting? Because there's nobody regulating it. No one is regulating this. Since you've got a fantastic lawyer there, can probably support it with do's and don'ts, criteria, and probably it will serve for Co-Asset. And since you have a platform to do this, probably people who want to do it can buy it from you as a guide.
Well,
Because I
I'm
also
not
list-
sure about the sale of the guide. I mean, I can say from my perspective, I think my perspective is simply this. The code of conduct, if you look around, is starting to happen because that's where the conversation starts. And I don't think I own the code of conduct. It's everyone, you know, and it changes and it will change. And because it belongs to everyone, I shouldn't claim ownership. That's why when you say can I sell it, I think we can probably list what are some of the practices. I definitely wouldn't sell it, and that's why I'm encouraging people to come online, be a member of our site. When I say member, I don't mean, you know, membership is free, so you just be a member. But this sieves out between those who are genuine and those who are not. Of course, in time to come, we have one more tier called the AI, accredited investor, but that's going to happen much later. It's not going to happen tomorrow. It's not going to happen right now, but it's going to happen in a couple of months, maybe a year's time. Okay, so that would be even make the whole system more robust. So the short answer is we are working hard to provide guidance. Okay, but I must qualify that these are not legal guidance, and if we do something like that, okay, it is free. It's for everyone, okay? And I also want to add that that's why we also work with partners, okay? We work with partners like, Wealth Migrate, okay? We work with partners like Harry Elias, with ASOP, with everyone here, because this is not something that we own. Okay, I think Tim correctly brought out, you know, that I think something to the effect that no man is an island. You know, the better ideas will come when two or more people come together. That's precisely it. You know, that's what the whole crowdsourcing, crowdfunding movement is about. It is about power to the people. It's about you guys, and we're just here to help you guys do that. That's all.
Letty, let me just jump. Okay, maybe just to add a bit of perspective to what Etty has said. Core assets didn't invent crowdfunding. So in that sense, I don't think that this idea of providing leadership and legislation or direction or even guidance in best practices would really be within their scope or their area to do. I think the best way to understand core assets is that they are a facilitative platform. And I think Getty's perspective in setting up this business from day one has been collaborative. He, I think, is firmly of the belief that this space is big enough for everyone. And idea that I think gave birth to core assets is, he says, how can we then help to bring everyone together so that there is an interactiveness that will enable opportunities to actually flourish. Alright, but coming to answer specifically what you are concerned about, and also to touch on what Getty mentioned, really, if you think about it, best practices, code of ethics, they are not unique just to the crowdfunding sphere. If you're a real estate agent, there's a code of ethics and best practices, and if you think of it, it really comes back down to the personal responsibility and common sense that many of our eminent speakers have talked about already. We are really talking about being transparent in what you are offering, being able to deliver on the promises that you make, and being able to give value that you promise. That is if you're the opportunity provider. If you are the investor, there is nothing that can substitute your own personal due diligence. Give you a bit of an off-tangent kind of example. I sat as a mediator during the financial crisis in the FIDRAC panel. The government was trying to manage this huge fallout of all these investors that have been suffering as a result of the financial crisis, all the high notes and all the various other notes that went off-key, when the investments failed. And a recurring theme from these investors that are coming now to the table is they say, when the financial officer or the banker presented this opportunity to me, I didn't read my contract. I just based on whatever the relationship manager told me. And it was a recurring theme, and these investors expected to get paid by the bank. Okay? Alright? From a legal perspective, I say that they didn't do their own due diligence, and that is why they found themselves in that predicament. They were lucky that the government decided to intervene and set up FIDRAC to actually manage these through mediation. Otherwise, there are a lot of these small investors who would have been burned and would have had zero compensation, because if they had to go through the courts, hefty legal fees, proof beyond doubt, or proof on the balance of probabilities, and if you go and testify and go and tell a judge on oath, I didn't read my contract, it boggles my mind as to whether any judge is going to award you damages. Alright? But that is just to give you an example that the crowdfunding sphere is going to be no different. You are going to be having retail investors who are going to be of that nature. If you are the opportunity provider, how do you position yourself to minimize or mitigate those risks? Alright? So it's no different, this space is no different from any other business opportunity that you see. Core assets have basically positioned themselves as a facilitative platform, and I think the best way is to collaborate and tap the collective wisdom and the collective opportunities together. I think with that, I'll hand it back to you.
Well, I think we're wrapping up. So, but it sounds like your advice overall is be smart, do your due diligence, and be a good person. And that will make the crowdfunding movement successful. Okay, great. Thank you all for being here.
All right, ladies and gentlemen, can you please give them a big round of applause?